points on how to stay out of tax trouble. Let's jump right in. Today's topic is tax management for realtors. Now, I empathize with realtors because the majority of them, are put in the most difficult tax management circumstances of almost any independent businesses. Let's start out by saying that once a realtor gets to a certain level of sales, that level is somewhere between 5 million and 10 million in annual sales. They have the capacity to hire professional staff. They usually have an assistant, a marketing team, and they usually have a professional accountant to handle these things. This video is meant for those that aren't quite at that point yet. So I have 3 suggestions. So first of all, a realtor's primary expenses often focus on travel, driving, meals, events, those types of expenses. All of those are subject to the toughest type of IRS regulation to prove deductibility on your tax return. It's not enough that you actually did do those things, and you can prove that you did those things, and you have receipts to do those things, and maybe you even have video and company video of you doing all these things. That's not enough. IRS doesn't care. They will throw out all of those deductions. You need to have a log made at the time of the event, each event, in order to justify the expense. Now, there's a little bit of good news. You don't need every single day and every single event of the entire year. If your business is pretty much the same year to year, we might do a sampling of those, but we need to provide a log in the format that IRS wants, or I've seen it many times where they will throw out the entire amount of those expenses, your auto expenses, your travel expenses, your fuel expenses, the entertainment expenses that you put up for events, all of those things without some type of log that meets their criteria. There's an easy way to do that. The automated accounting system, QuickBooks, puts that on your phone. You hardly have to lift a finger. Maybe once a month you have to swipe left or swipe right to record an actual event, and perhaps maybe add a name or two to coordinate with your daily activity journal. And even that with AI is becoming obsolete. Second point is have your log connected electronically with your bank account. It's amazing how many people are still using PDF or paper bank statements to try to put together a tax return at the end of the year. That's obsolete, and if challenged, it will not fly. You cannot afford to have a IRS representative go to the in an audit and say, here's my PDFs of all my bank statements and everything's highlighted in yellow and matching my general ledger. Will not work. We've had that go down. You need to have an electronically linked flow from your activity journal to your record of expenses back to your bank account. And it's so easy to do. There's no reason not to be doing it. And finally, on the mileage log I mentioned, those are available. There's a couple of good ones. The one that I use most often is actually tied in and free, well, at no additional charge to QuickBooks Online. And that's the account that is so cheap and so affordable right now under special programs for at least for 2 years that I recommend that. There are some others, and I'm happy to talk about that if need be. For today, thanks for showing up. If you like what you saw, please share the post so that others can benefit. And I invite you to submit any topics that you might want to see covered in a future episode by using the message link on the app. Join me here tomorrow for another Tax Minute.